Hi, Rajesh. Hi, Lynn.
Hi, Payal.
Good evening.
Hi, good evening. We
Very
can start?
sorry, Rajesh, I couldn't hear you.
Yeah. Can I ask a question?
Sure, please go ahead. Okay.
Okay. Only I was trying for peer comparison, Payal, but when I see, I'm not getting exactly military because they're not revealing any reports or financial statements. So can I compare with the UAV who are doing drones, not only military but others?
Would they are into UAV, right? And drones, not just working for military, but also supplying it to somebody else. Absolutely.
Yeah, only the military drones data, I'm unable to get those companies, but there are companies who are just doing the drones. So that because for peer comparison, there is very limited data available online or in Statista in the Deakin library.
Can you, if you don't mind, what you do is in your chat box, not to everyone, but to me, can you just reveal the name that you have, the peer company that you have chosen? Because when you reply, just reply to me.
Okay. Okay.
Hmm? I'll just go through it and I'll let you know whether that would be okay or not.
Sure.
Hmm. Any other query? Anybody?
I'm sorry, Shadab here. I have a question. Uh, See, there's a query regarding the cash budget. Now, in the cash budget, I don't know if it's a trick question or it's pretty straightforward, right? The fixed costs, is it gonna remain the same because we are looking at only Q1? Is it gonna remain the same as what we calculated for 2022 and put a percentage increase? Or do we need to allocate it based on the, because if you see the revenue for 2022 was around 33 million, but the sales that is being shown per month comes up to around maybe 15, 16, or maximum $17 million annually, right? So COGS also will accordingly be lesser for this period. Now, will the fixed cost remain the same, or is it need to be proportionately be varied?
You say fixed cost, it is going to be constant irrespective of number of units that you're going to sell.
Oh, so okay, that makes sense because I initially did that, but then I don't know, I didn't. Maybe there could be a trick there. So
I understand. No, I understand the thought process is that, okay, if the number of units are lesser, then overall my production cost is also going to be lesser.
Hmm.
Right? But when we talk about fixed cost, it is not going to be related to production. It is going to be related. It is going to be constant. So
Perfect. And one more question was because of the DPO and let's say because the previous sales is given only for November and December, but we will have some payment to be made in Jan as well for the COGS. So is it safe to assume a sales number for October, or how do we go about October?
let's say if you are doing some working, uh, going to your historical data, whatever percentages that you're able to apply and you're able to fetch the data, and you're assuming, just mention it clearly when you're evaluating your cash budget, that this is how you have calculated it.
Right, right. Okay, okay. Makes sense. Fine. So
Otherwise,
there could be an assumption there.
if you feel that no, I don't think I'll be able to give an opinion with because there is a want of data and that is not giving me a correct picture, and that is why you're going ahead and taking this step, right? Otherwise, university is absolutely okay you keeping it blank and calculating it with the data that is given to you, with the information that is given to you. So
Okay,
if
so there is no
in
right or wrong answer there. It could be okay, okay. Understood. Fine. Thank you. Thank you.
So Pei, I have question regarding the last section about commenting on the board responsibility and how they align with the Indian Code of Bankruptcy. So do we have to compare like how they have done a good job in maintaining the profitability, liquidity, and then you know, how they could like further improve or such? Like I did not get it quite clear with the last section asked.
So recommendations would be towards two things. One would be giving a specific recommendation whether you're going to go ahead with the defense contract and whether the proposed strategy of going ahead with defense contract with a debt for capex. So you will specifically comment that, okay, will you go ahead with that or not? And if yes, you will justify your choice, you justify your recommendation. And then apart from that, you could also give recommendations over viability, solvency, cash management. If at all you've noticed, okay, there is a development area, there is a loophole here which can be improved and which can help the company, help improve the overall viability or the profitability in the business in future. So that would be in addition.
How
So
about
you've
the
done your financial analysis
Mm.
and you, let's say out of 3 or 4 parameters that you've checked, there are 2 parameters that need some attention.
Mm.
So you could suggest the ways or strategies on how it could be improved.
Okay. And about the Indian Code of Bankruptcy, as I went along the code, I did not find information about the board responsibility during the time when the company is still like solvent. Can I refer to another act and code apart from such like insolvency and bankruptcy one?
So in case of solvency, let's say you're not able to understand, you're not able to cite any roles or responsibilities, you will clearly mention it that because the company is solvent, there is no additional role or responsibility that a director will have to fulfill, right?
Okay.
But you could, from the extracts of the code, the same code, you cannot refer to any other code. You will have to paste, or you could just note few roles and responsibilities that are mentioned in the act, in the code. That is, just
Okay.
in case if the company is heading towards insolvency, or just in case if ever a company goes towards bankruptcy, then what are the roles and responsibilities that director will have to fulfill? So a comment specifically stating that, okay, currently the company is solvent, hence no duties to be fulfilled. However, just in case if something is not going good in the business and is ultimately going to make the company go insolvent, then in that case, what are the rules or what are the duties of the director?
Okay. Got it. Thank you.
I have one more question regarding the structure. So basically, I start off with the viability, liquidity, solvency, and then make the review of the strategic plan and the solvency thing. So the solvency code I can include under solvency, right? Whether the company is solvent and the board of directors, the recommendation for the solvency code can be included under the solvency section.
Do not include it. Do not mix with it.
It will be a separate
It will
section.
be post your financial planning.
Okay, done. And before that, for the 3 liquidity, solvency, and viability, is it necessary to just show my analysis of what I am assuming or what I'm understanding out of that, or is it also necessary to give the recommendations for each section?
Not in the analysis part.
Okay, so the
Analysis will
recommendation
be
will come
just
at the end,
evaluation
right?
and interpretation, right? Any recommendations that you have to give related to viability, liquidity, solvency would be
Will
under
be part of the strategic.
Correct.
Okay, okay, that was my understanding. Just wanted to clarify. Thank you.
Okay, I'm just getting messages, direct messages from the candidates. I'm reading them. Adrian, the first company that you have mentioned is good to go. I am not 100% sure about the other 2, right? But if you have gone through some research or the business information, and you think that, okay, a part of it is related to Duran Limited, you can go ahead. But the first name that you have mentioned is the company that you can go with. Right?
Okay, fine.
Yeah.
Thank you.
Another doubt that you have, Adrian, here is whether in Q1 2023 cash budget calculation, do we need to consider the full year AP and no, you will individually, you will not consider AP or AR for the year 2022. For your accounts payable, you will compute your COGS on the basis of monthly sales that are given to you, and you will apply your days payable outstanding. For accounts receivable, that is the collection that you're going to do, you will follow the table or the payment terms that are given, that okay, in the current year we are going to collect 20%, then 20% of 1 month ago and 60% of 2 months ago. Fine. So if whatever data that is available in the balance sheet for cash budget, ignore that data related to AP and AR. Rajesh, again, the first name that you have mentioned is good to go. Okay. Let me check the second one. I'm not sure what that business is into. Just a moment. But the first company that you have mentioned is the right company to go ahead with. The preferred competitor would be the first company, Rajesh, in your case. The second one I see is a Chinese company, right? If at all you're going to compare it with a Chinese company, try to match with the turnover that they have, whether that matches with the Australian Duran Limited. Right? So that cross verification, whether they are comparable or not, not just from the business description, maybe you're not getting the right fit, but at least from turnover point of view is what you could cross check. Otherwise, the first one is good. You can, Adrian, you can. This is where I believe the company that you have found is an Australian based business, right? And that is the right company that you can compare with. But let's say if you're not able to get the correct fit, or you feel, okay, there's a lot of discrepancy with the data that I am getting, or maybe I'm not able to fetch all the financial statements for the company that I've chosen, which is a Australian based company, then in that case, the preferred second preferred choice would be a US based business. So let's restrict our comparison to Australia or US based. If at all, let's say somebody is going ahead and looking at, okay, I've got a perfect fit, but it is not Australian or US based, but it is, let's say, like the example that was given to me was an Australian, was a Chinese company, then in that case, make sure that the turnover at least matches. Shadab, just let me cross verify this. The turnover might match, but I just want to check the business understanding. Perfect. Yeah. You can go ahead with it.
Thank you.
Yes. Adrian, give me a moment. Adrian, still go by the first name that you had given to me. What I feel is that is a better fit in comparison to the companies that you have mentioned, which are from Austria. Right?
Hi, I have a question. When we review the strategic plan of Duran, can you base on the cash budget in the Q1 for make decision or only based on viability, solvency, or liquidity in 2022? Do we base on the Q1 cash budget?
Mute.
Yeah, I'm here. Yeah, because in the part one we do the viability, liquidity, solvencies of Duran, and the part two we do a cash budget, and we see some deficits in the cash budget of the Duran, and we see the potential risk of the cash deficits in the future 2023 after I do the cash budget in Q1, and then we go next to review the strategic plan. My question is, can we base on the 2022 or we combine with the Q1 2023 for making decision for the Australia defense for Fox contract? Yeah.
We'll compare both financial analysis as well as planning, taking 2022 as well as 2023 projections that you have for your viability and for your planning. On the basis of that, we will take your decision.
Okay. Not based
not,
on the no.
Not only on the basis of financial planning, on everything.
Yeah.
Viability for 23, liquidity solvency for 22, and cash budget for 23.
Okay, thank you. Yeah.
Payal, I have a question on the cash budget. Yeah, so as per assignment, we were asked only Q1, January to March. If at all, for example, if anything is going beyond next quarter, do we need to show the cash surplus or deficit for the next quarter as well, or only we stick to the Q1?
You can restrict it to Q1. Only thing when you're analyzing, maybe you don't extract the entire budget, but at least try to see that, okay, if my deficit is increasing or if my surplus is decreasing, then if at all your surplus is decreasing, how long you will be able to pay for your operating expenses. That projections could go ahead, or that understanding that, okay, let me just keep the the growth that I see or the decline that I see. What if this continues? How long will I take for surplus to be converted into deficit? So that understanding or that interpretation could be beyond whatever. But you don't have to extract it beyond it. What is expected? Q1 2023.
Okay, because if I'm trying to Q2 and Q3, I don't have a sales forecast. So I'm unable to do the thing. So I will just leave it Q1 and show whatever is there available data in the next months.
Correct.
Okay.
You can just paste your Q1 cash budget. That's it. That would be.
Yeah. And just coming to the basics of cash, I'm just trying to understand. When you say cash, account receivables and market securities and cash equivalent, three will come under the cash, or only the cash will come under the cash?
Cash and cash equivalent balances combined. As per
so
just let me check the numbers for finance. We do when we placed it. Yeah, cash and cash equivalent.
That's it, right? No need to,
no marketable securities, no receivables.
Okay. Thank you.
Ruth, just a moment. I can see you have texted me. Let me go through it. I noticed that. They have not paid back. Ruth, when you see retained earning as a negative number, then that means the company is into losses, or the company has accumulated losses over past years. So that's not payback. Just check the numbers in the balance sheet. Yeah. Yes. So negative retained earning would mean losses in the business, accumulated losses in the business. For benchmarking, do we include the competitors' financial statements in the do not include the entire report. AJ, as I said, you could just have a summarized table wherein you have summarized all the ratios for your own company, year 1, year 2, and then you have your competitors analysis. So if you can insert or paste the numbers from your competitors' financial statements in your Excel so as to calculate. Let's say even if you don't want to calculate and it's a listed company and you're able to find the data on Yahoo Finance, you're able to find the data on Screen or Alpha or any other site, you can directly take the ratios from those sites as well. But in your report, when you're analyzing it, graders would expect you to paste the company's ratio summary as well as the competitors. Right. So a nice table summarizing, let's say 7 liquidity ratios along with competitor. Ruth, for competitive venue, how many companies do we need to compare? I have only 2 names. 1 is also enough, Ruth. Okay. Minimum 1. No problem. No issues. There is an office. See the cash office. You have Shadab, you have converted your fixed cost into annual into monthly, right? That is the check that you do.
Yes, that I've done. I've spread it out over the 12.
You've spread it to 12 months.
Divided by 12 and spread it on over the 3 months.
Over the okay, fine. Then
Okay.
then you're not missing anything.
Then it's not. Just one question here, because we are looking at the debt of 8 million. Should we include that in this, or no? That we keep that aside because we have not yet taken that debt. It's it's an assumption, right? We might take.
We might take. Do
So
we?
it's not part of this.
So the check would be: are we capable of taking it? Are we capable of repaying it? Do we have enough earnings to cover that interest? So that could be the check. So you're not really including or incorporating. This would be part of your recommendation, not part of your calculation.
Not part of the calculation. Okay. And one question here is, so basically the assumption or what data we've given is only for one stream of revenue. There could be multiple streams of revenue which come up to 38 or 35 million annual revenue. But what we've shown here, 3-month sales, is just probably one stream of revenue, not that doesn't extrapolate for the entire year, correct?
There's no information related to other products also. We will assume this is what they get monthly.
Okay. So no, because when I assume that is where I'm not able to connect the 2 things, because when I assume that we are only making about 3-4 million in 3 months, then how do I make 34 million annually? Because my projection for 23 financial statement is I made a revenue of about $36 million. But then based on the data provided for the 3 months or the 5 months from November to March, our average monthly revenue is only around 1.5 million. So 1.5 million over 12 months is only about 17, 18 million. So where is that remaining money coming from?
So maybe the growth rate increases second half of the year. Maybe that could be the reason. So
Okay.
do not try. That's what initially also said. I had mentioned that do not try to flow or compare the data segment wise with the financial statements or with some other instruction that is given to you. That might not match.
Might not. Okay. Because when we consider finance is purely numbers, factual, fact based. No, not wild assumptions. So
Absolutely right. Reason being, this is a case study created by somebody, right? So taking some company and then simplifying it by adding some assumptions. So there could be some, discrepancy wherein I'm not able to get the entire understanding that, okay, why my one quarter is not equating my entire year.
right. Okay. There could
That's
be some quarter where we get massive income and we make that.
right,
Okay.
right. So
Understood.
we are not provided with all the information, and that's the reason what we are doing is whatever information is available, on the basis of that, what is our understanding. So university also checks the same thing, that do you understand these numbers? Do you understand the direction or the change in this number? And you are able to justify and take decisions? If yes, you would be graded accordingly.
Perfect. Okay. Thank you.
Ruth, I've already answered this. For competitive financial information, okay, appendix. No need, no need. Adrian, you can just put a reference link that, okay, you've referred to these financial statements, and whatever numbers that you are taking, maybe you can put it in the Excel while calculating the ratios, right? And as I said, if you're referring some financial site and you're not even calculating them, might as well be okay, right? Just refer to which site you have referred for the ratio calculations or for your financial statements. That would be enough. Need not put anything in the appendix. There were two companies, I guess. Lin, just a moment. This is little new. I've never heard about this business. Lin, just a moment. Let me cross verify. I don't know. I'm so far, whenever I've compared, I've got 3 or 4 companies, not the company that you've mentioned. Is this a listed business? Yeah, it
Yeah,
is.
they
It
are
is.
all
It is. It
listed.
is. It is. It is. I could see it. An Australian-based company, correct?
Yep, all of them.
And did you cross-verify the turnover?
I did verify with the revenue, so that's like 2 number in revenue. So
You've checked the revenue. So with the
yeah,
P&L that we have and the P&L or the income statement that you refer for the company, you've checked the revenue from operations or the total revenue.
the total revenue.
Fine. All right. Good to go. Yes.
Okay.
Any question that I have not answered, do let me know. You can post it again. Tried answering whatever I saw it in the chat box, but if there's anything that I missed by mistake, then do post it again. No questions? All the best, everybody. And I'll just launch the polls before we end the session.
Thank you, Payal. See you next week.
Yes. Good luck, Rajesh. Good luck, Liam.
Thank you.
Bye. Good
Hey.
luck. Good luck, everyone. Do it. Thank you. Bye-bye.